Good morning, everyone, and welcome. My name is Anka Metcalf, and today I will be talking about how you can supercharge your trading just 1 hour per day. This is what I have specialized in over the years, and I have discovered that who knew trading less is actually making more money. So work less, live more, and grow richer using just the power hour. And today I have a treat for you guys because I'm going to explain exactly how I make my money in the market. So for those of you that are new here, I see a lot of new faces in here. My name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, and invest in any market, whether it's the stock market, futures market, crypto market, whether you're trading options, etc. I have been a professional independent trader with over 20 years of trading experience. I come from the investment banking field, and I have 10 years experience in that domain. And I'm also running a swing trading service for stocks and ETF. This is our oldest program since 2010, and this is actually the year where when TradeOutLoud came about. I also run a futures trading room, which is extremely successful because it's focused on income generation, only trading 1 hour per day. And I created this room in 2017. We do offer, like I said, trading education for swing trading, day trading, and also for investing. I specialize in high velocity moves. So high velocity move is a specific area on the chart that provides follow through and provides above average follow through. So I focus in the morning on these specific areas for high momentum. And we don't wait for high momentum to kick in. We know when high momentum is being generated. And I have an example from today's trading as well, where we initiated a trade in S&P, which achieved all our targets. All right, so I'm the designer also of a proprietary trading system that may seem complicated, but it dumps down everything. And I focus on price support resistance, but not on only supply and demand, because that would tackle only about 10% of the equation. I specialize in specific trigger times for the New York trading session because these are the times where trades happen and when these trades have follow through. How many times have you guys been in a trade? And this is an open question for you guys. Just give me a 1 in here. How many times have you found that perfect setup? You were in sync with all the technicals. You got into the trade. You were triggered in the trade. And shortly after the trigger, the price turned around. Whether you were trading stocks or whether you were trading futures, the price literally turned around and stopped you out. And to our maximum frustration, the price action turned around then and hit your targets without you being in the trade. How many times has it happened to you? I mean, I know that when I first started day trading, this would happen to me quite often. And I know why. I have determined why. Because I was not in sync with the timing of the market, the right timing, the right momentum of the market. And I used to get in where institutions would run some stops and timings when they run some stops. So now I have developed these trigger times, and actually these are proprietary for TradeOutLoud, and I have developed them over 15 years ago, and they have been working literally perfection every single day since that point when I have perfected this system. I also pay attention to specific price zones. These are the best kept secret of institutional traders. Institutional traders cannot get in at once with their whole amount of contracts. Like I can get in with 5 contracts or 7 contracts or even 15 contracts or 20 contracts, but institutions get in with hundreds of thousands of contracts or tens of thousands of contracts at one level. So by the way, you know what? The problem here is that they cannot get in with the big amount of shares or contracts. So they have to scale in. So guess what? Because I have been trained by a professional institutional trader, works still to the day at Goldman Sachs, I have developed, and he shared this precious secret with me at where these levels are. And there are 4 price points, whether you're trading stocks, futures, etc. And these are the pressure points where institutions leg in, scale in, but also scale out. Okay, chart synchronicity and divergency is also big, because when you're having a divergent market, meaning, because we're referring to futures right now, when you're having, let's say, NASDAQ stronger and the Dow weaker, right? That is a divergent market. And it's very hard to take a trade when that environment occurs. Why? Well, because for once, you don't know whether NASDAQ is going to have the ability to pump up the Dow as well and create that euphoric optimism to take it up with it, right? Maybe we have some weak stocks under the Dow, right? Maybe UNH, maybe Goldman Sachs, maybe financials are pulling back. And that is going to be a problem right there, right? So you need to have, in order to have this really phenomenal volatility and velocity environment for the stock or for the index, you need to have an in-sync market. And by the way, today we have an in-sync market. We have a market that is literally right now correcting back to the upside where it belongs, technically speaking. All right, so I can teach you guys how to generate income literally in 2 hours or less every single day that will contribute towards your wealth. So what does that mean? So when I day trade, right, I day trade for income. So I day trade because I want to generate my income. So what that means is that whatever profits I have at the end of the month, I take them out, I pay my bills, I pay whatever it is that I need to pay, and then what is left over, I transfer into a portion into my swing trading account. I contribute to my investing account. And this is how you create wealth. In swing trading and in investing, you have your money working for you. So in today's presentation, we will talk about the most important time to take high-odds trades that have the power to follow through, because it's not just about seeing the setups and taking the setups. It's about the setups that could contribute to a good follow through so you can make money and not sweat through the trade. Understanding risk is very important, and a lot of times traders blow their accounts up because they don't have the risk concept. And here I'm going to demystify the risk concept and how much I risk per trade and how I tackle day trading. Reading a chart and plotting a trade. I will be sharing with you guys some charts, and I hope we have enough time today so we could go through today's trade that I have initiated, because you will learn more from setups and from someone that has been trading for a longer period of time than you are going to learn from a book. Also, we're going to talk about the advantages of trading futures. I have not been a futures fan when I started day trading, because I came from the hedge fund field. I came from the investing field. So I just wanted to trade on my own money, trade my own accounts. And that's why I went, because other than that, I was pretty much working in the same domain, right? But I wanted to take my own money. I wanted to have the liberty to have the time off whenever I wanted on my terms. So now I trade basically less than I would commute for my job. I used to travel every day about 3 hours, an hour and a half to go to work with the rush hour and everything, an hour and a half to get back from work. Now I only trade 1 hour. I get out of bed, I take a trade, and I'm done. Literally, my day is done around 11 o'clock every single day. So how would you feel to make the switch to futures trading? So when I was trading stocks, I would be in front of the computer all day long. It's not that you have to trade stocks all day long, because you shouldn't, okay? You could, but you shouldn't, because it's not healthy for you to sit in front of the computer for such a long period of time. And by the way, did you guys know that there's scientific proof that the human brain cannot focus more than an hour and a half every 3 hours or so? That's right. So give it what you can in the morning session, in the power hour, whether you're trading stocks or whether you're trading options or whether you're trading futures. But I made this shift to futures trading based on my accountant and advisor advice, because I was paying a lot in taxes and I was, pretty much donating a lot to Uncle Sam. So my accountant said, hey, have you looked into futures? We have another client that had already made the move to futures and he's not paying. Plus you get a lot of tax advantages being a professional futures trader. You can look that up and you can talk to your CPA about it. So we're also going to talk about time frames that deliver the best results, because a lot of times traders, what they do is they ask me, what is your favorite time frame? And I'm like, I don't have one. I don't. I trade where the trade sets up. I trade the time frame where the trade sets up. And sometimes it sets up on the 1 minute. Sometimes it sets up on the 5 minute. Today, it's set up on the 15 minute because the 1 minute and 2 minute were literally noisy and garbage. All right. So day trading, like I said before, day trading is an income style of trading. You're in the market and you're out in a few minutes. You're going in the market and then you're out in a few minutes. You close your trades by the end of the trading session every single day. So usually by 4 o'clock, you shouldn't have any trades on. And if you're like me, you just trade power hour and you're done. This is actually, for me, instant gratification, even if you lose in a day. I mean, what is one loss or 2 losses or 5 losses, for example, even in a day or a week or a month? That is just literally a drop in an ocean of trades. Okay, so what truly matters is what happens at the end of the month, the balance at the end of the month, and not even that much at the end of the month, but at the end of each quarter. Because every single quarter, we transition through FOMC, through option expiration, through quadruple witching option expiration, through the most important part of earnings season, the first 6 weeks of earnings season, then the latter part of earnings season. So in order to evaluate your trading, you need to evaluate what? Your quarter. How has your quarter been, right? And you look and say, how did I close the last quarter, right? How did I close the quarter before that? Because the trading environment is different. You don't evaluate your trading based on 1 day or 1 week or 1 month. Okay, and this is how you trade your way towards wealth. I explained what that wealth is, but you can't get into the wealth part until you understand what risk is. So whenever I get asked, like, oh, isn't trading risky? And I go like, hey, look, isn't crossing the street risky? What if a car hits you and you die, right? Isn't biking risky? Boom, there's a car that hits you, you die, right? So what about drinking a glass of water? Whoops, I can choke, right? You can die. Trading is the same way. You assume a risk level, right? You assume a risk level. So once you have determined a risk level that it is in sync with your personality, with your risk tolerance, then that risk becomes absorbed much more easily. So before getting in a trade, ask yourself, how does, I don't know, let's say $500 mean to me? What does $500 mean to me if I lose in a day? Would that devastate me? And if the answer is no, that's tolerable. I'm fine with losing $500 a day. You have to be comfortable with the amount that you could be losing on that day. And once you're comfortable with that amount, then that is your risk amount. That is your risk tolerance. If you feel like, oh my God, $500 is unimaginable, then that is not a good risk tolerance for you. So dumb it. So just take it down, right? Make it 250, make it 300, make it somewhere where it doesn't devastate you if you lose it in a day. Now, determining your risk and your risk tolerance. Number one, correlate the correlation between risk and account size. So the risk level you assume should be proportionate to your account size, to your trading account size. So what does that mean? You need to have a management guide for yourself, for your account, for your trade. So traders should, especially day traders. So I'm talking about day trading here because you have a lot more risk exposure in a day than swing traders, right? You're dealing with the current fluctuation and you're right there in the trenches with algorithms, right? So there is a lot more chop to day trading than there is to swing trading. So traders should limit their exposure to 1 to 2% of their total account balance per day. So what does that mean to you? So what that means to you is that if you have a $50,000 account, your risk per trade should be 1%. I risk 1%. I don't even go into 1% into day trading. I risk 1%. And I'm going to tell you in a second why. But before that, 1% is per trade. And I allow myself around 3 to 5 trades a day, because I want to make sure that if I take a first trade and lose on that trade, take a second trade and lose on that trade, I allow myself, or even 3 losses, I allow myself the 4th trade in which I get in, and I have the option to take myself out of the hole. Boom, just like that. I'm going to explain to you how you can do that if you respect the rules of the game. So I use 1% on all of my trades. Position sizing is what literally is going to differentiate you from a winner trader to a millionaire trader, multi-millionaire trader, to then a failure. You're always going to blow up your account if you don't position size. This is the let's say holy grail of trading, position sizing. So you need to position size. So what does that mean? Let's say you have $500 risk per trade, right? And I'm going to explain it to you a little bit later. I'm going to explain to you that concept. I'm going to show you exactly how to calculate that in an easy way. So let's say you have $500, right? What you do is you calculate the difference between the entry and the stop. And that difference, you're going to see how many contracts you're able to fit into your account size. So you're not going to go over your $500 on that specific trade. Okay. So you got a position size. It's not like, oh, I'm going to get in here and I'm going to look at my P&L, and once it approaches $500, I'm going to be out. No, you have to position size. And again, it is essential that you are setting a cap on the number of trades that you take per day. And this is applicable for day traders and swing traders alike. So why is that important? Because remember when I was talking about the 1%, right? So here's the thing. You take a trade, and let's say you lose, if you don't position size, let's say you lose $500. On the next trade, a lot of traders have the tendency to double up to make their losses faster. So they're going to risk $1,000. So there you go. In 2 trades, you have $1,500 already in the game. In the 3rd trade, you get really frustrated because you lost on your first trade, and you go like, oh, I'm chickening it out. I don't know if the market is going to work. It's the market's fault always, right? And I'm not going to get $500. I'm going to risk only $200. And oddly enough, the trade that starts working is that trade where you only risk $200, right? But the problem here is that that $200 is never going to recover the $1,500 that you just lost. Because the real deal is when you have that managed risk of, let's say, $500 a day. First of all, you have it constantly, so you don't have to think about it every single time when you take a trade, and it's so much easier because you're automating everything. So on a first trade, let's say you're going to risk $500, on the second $500, on the third $500. Let's say you have 3 consecutive trades and you lost on all of them. It happens, no big deal. What happens in your 4th trade? In a 4th trade, if the price action is going to run 3 Rs based on velocity, right? Then you're going to recuperate the losses with 1 single trade. So a lot of traders are having a hard time digging themselves out of the hole because this is the reason why they don't position size. Okay. And the reality is that you need to manage your losses more than you manage your wins, because the wins manage themselves. But the losses, you need to have consistency in your losses. And I know you haven't heard this term, but you need to have consistency in your losses. You need to have $500, $500, $500, $500, $500. Okay, that's what you need to have. All right, let me share this chart with you guys. And this is a short position. And you can see here that we took this short. We had a stop here. The sell setup trigger actually below the doji low. But we missed this one, and I missed this one. So we took it below this low right here. And this was a double confirmation. It was a sell from the doji low. It was a sandwich breakdown. We have established a stop above this pivot high, and the first target is into support. So into support, this pivot support right here was target 1. And at this point, you have the option either to scale out a little bit, scale out half or a quarter, whatever your risk tolerance is, and then let the price drop. And you can see here that we have another target set, which is into a lower level. You have this tracing right here that is coming from a higher time frames because you don't see it over here, right? It's coming from a higher time frame. So with this trade right here, you can see that the difference between the entry and the stop, this represents your risk. This is the number over here minus the number over here should give you the number of points that you're going to be risking on a trade that needs to fit into that, let's say, hypothetical $500 that you're going to risk per day. Does that make sense? Everybody clear right now? Okay. Everybody cool? All right. We're on the same page. So you can see here that in this trade, into the target 1, we have achieved over 1 R, and we have achieved extra 2 Rs into target. So let's say you had a trade before and you attempted, I don't know, a long or a short or whatever, and it didn't work out. Guess what? This trade could have gotten you out of that hole because your risk, right? So your reward minus your risk got you that 3 Rs that recuperated the 3 trades that you lost that day or the day before or whenever that those losses occurred. Let me show you another trade right here. So we had another entry, and by the way, this was, I believe it was last week. We had a pullback. This is the buy setup right here. So we have a 3-bar pullback. We have a 1, 2, 3 rotation. And this is the buy setup. Entry is above these 2 candle highs. The stop is below these 2 candle lows, and the target is into the prior high. So you can see this is how a tradable void looks like. So you have this void into the next resistance, right? So you don't have any other pivots and anything that would interfere in a transition of price higher. And then you have another buy setup over here. So you just keep on milking this NASDAQ longs, the NASDAQ chart right here. So here you have about 3 Rs into target. Here you have about 2 Rs into target, but it's still a really perfect trade. Here's another trade right here. And let me share with you today's trade. Okay, so we took it off the 15-minute chart. This is the mini S&P. We took it off the 15-minute chart. Going to zoom in a little bit here. Okay, so as you can see here on the 15-minute, we have this 180 reversal almost over here. And by the way, this is the overnight action. You guys pretty much know what happened, right? Okay, we're not going to talk about it here, but then we had a price congestion right here into the 95. So I'm just going to mark this right here. Okay, so we have this 95, and this is what we took. So first of all, we took we had a target into 5,900. We had a target into 5,910, and then if it would have broken above here, it could have ran higher. So you're going to see here that it starts transitioning higher, and it still has room into the 30. So I took myself out of the trade at 59.10 because I had to be here with you guys. So I left some money on the table here just to be with you guys and share what I do for a living and how I earn my money. But other than that, I would have made another 10 points in here in the S&P. So a lot of the things that, and trading is basically easy when you know what you're doing and when you have a plan, because everybody in here should have a trading plan. Everybody in here should have, and not a novel. You have to write it on a little post and tell, so it reminds you, what are you trading? So it's a refresher every single day, a reset every single day. So you want to start trading, but you don't know where to start. I can help you either way. I have trained thousands and thousands of traders. Also, you can make your work week or your work day even, 5 minutes. Work 5 minutes a day. For example, at the beginning of the year, we nailed the CPI numbers and the PPI numbers. Unfortunately, last edition of the CPI numbers that we had in November were not tradable because the market was into conflict with the technicals. So we did not trade it. But we traded throughout the day and it worked out beautiful. So there are times throughout the month where you can literally trade 5 minutes and be done. if you know what you're doing. And this is what I shared with my traders before the market opened. These are the watchers. You can see here the levels that I posted, right? And you can see here that high risk, high reward, as with any kind of news. And I don't trade the news in specific. I trade the effect of the news. So I don't get in before, right? I get in right when the news is being released. Not often, but usually when we have CPI and PPI numbers. And take a look here. I think I'm done for the day because every single index has achieved target, okay? So you can see here, the S&P achieved on deck. NASDAQ wanted this number on deck. So targets achieved. We have been discussing these target levels from last week. So we discussed these levels that are institutional levels, and we see them on the technical charts weeks in advance, sometimes days in advance, sometimes even a little bit further. Here's another example, another 5-minute day. Good morning, team. NASDAQ and S&P already trading at all-time highs. Why I'm bullish, you can see here the targets. NASDAQ bullish, you can see here at the target. CPI numbers are coming in 1 hour. We already positioned. Caution, extreme volatility will hit the tape by FOMC day today as well. And then shortly after, not even 5 minutes after, you can see the 5-minute bar. Thanks for playing. I mean, take a look at YM here, right? YM, we had targets into 900, 940, 950, 970, 39,000 plus. Take a look at where it is right now. It's over 39,000. Like, how many R's are here? A gazillion, right? You have probably 15 to 20 R's. Traders dream about having a 2R trade, literally a month, right? So they could be a little bit up. And we do that very often. This is another trade posted in August. This is for TOL members only. The indices, bullish NASDAQ over this level right here. You can see the level right here. Bam, went right into target. This is easy, a 3R trade. Okay, perfect. These are my results for November. I always, when I have a presentation, I always share my results with everybody. So you can see that I position size. Okay, so it's very important to position size. You're not going to see here that I have a constant of, oh, I have a $20,000 account. I'm going to be trading with 2 standard contracts because I'm brain dead. Okay, no, you have to position size. You're a trader. You want to make it. You make a living at trading. You position size. You do a little bit of math. Okay, so you can see here that in RTY I took it with 10 contracts, 11, 4, 5, 10, 5, 5, 5, 8, 12. So the size is always going to vary. You're never going to see a constant size, and that is because I position size. Why? To have my losses in check. Do you guys see any amount here above 5,000? And by the way, I'm risking $5,000 per trade. That is my 1%. Okay. So do you guys see any amount here that is over 5,000? No, it's under 5,000, under 5,000, under. And if you see wins here that are a little bit smaller, I took them with probably half the size because of volatility. So yeah, it's fine. I take the risk. I take half an R into a high volatility, high risk environment. Okay. All right. So trade for a living. Why? I don't have a boss. I don't need to commute. I don't have any customers that I need to answer. I'm basically done and I hit the beach or I go anywhere I want. I play golf. I go boating. So I do the things that I love because I don't have to be in front of the computer. Okay. And it's just you and your computer. So how about turn your computer into your personal ATM and get serious about trading? This is the perfect time to learn how to trade and trade your way to financial freedom because it all starts with day trading to generate income. Oh, if you have a gig and if you have the income generating, engine going, fine. Okay. But if you don't have a trading and if you don't have an income trading, an income engine set, this could be your option. Okay. So the market is the permanent transfer of wealth from the novice trader to the very educated trader. Think about it. When you're getting into the market, I'm going to answer all the questions, by the way, guys. So keep them coming. When you get into the market, okay. So when you get in, when you start trading, right? Okay, so what is the necessary amount to start trading? 10, 25K, 25K is still very, very, very small for futures. Right now, the margin requirement to trade one full size of NASDAQ is 33,000. So they raised the margin requirement because of the volatility in the market. You could still trade the Dow. You could still trade Russell. Okay, you could still trade gold, oil, but the S&P, they raised the margin requirements to 22,000 and NASDAQ to 33,000. So you need really a bigger account for that. You could also opt for prop trading accounts. So you can have access to more capital, because this is a market that requires a little bit of capital. A small account is considered 50,000 or a little bit above 50,000. That is considered a small account right now. All right, so the market is very volatile and will remain volatile through 2024, and especially as we're heading into January. I mean, you can see what happened today in the market, right? Until inauguration, Russia-Ukraine saga, will it end? Okay, will it end? Well, not until January, most likely, because, and we're going to have to see if there is anything that could be repaired then. Israel-Hamas war, will it end? Nobody knows. FOMC rate cuts, will they continue to rate cuts? Well, we have indication they will. We don't know. Things can happen into December. Inflation is still super high. Massive layoffs continue. And will we begin the trade wars, right? Do you guys remember 2016 to 2020? We had lots of trade wars, lots of volatility. It was the great volatility where we had a lot of volume into the market, and it was a tremendous trading opportunity during that time. So no setbacks, just growth, images, consistency. This is the image from my trading account. So what do you need in order to start trading? You need a burning desire. How bad do you want to generate income is how you are going to apply yourself to succeed. You need education, because look, just because you look at a chart and you hit some button, doesn't make you a day trader or a trader in general. You need a really good, solid education. You have to have the discipline to follow the plan. You need to have patience to wait for the opportunities. Today, we waited like a whole deal, like almost an hour before we took the trade. I called the trade earlier in the trading room. Some traders took the trade and booked about 20 to 30 points in NASDAQ. But at the same time, it wasn't the right environment, and the market became very choppy within the next 45 minutes. And we waited for another trade patiently. We didn't just hit the buttons. Okay, let's try it here. Let's be the guinea pigs and see if we want to see if the momentum builds up to that. So we took the trade, like I showed you the S&P trade today, and it was phenomenal. So you need to have a burning desire, like I said, burning desire, conviction, perseverance, and you have to keep with it. Okay, this is what I trade. Basically, this is the futures panel. Basically, it fits in one sheet right here. My employees are the Dow, the S&P, NASDAQ, and Russell. These are my go-to income generators. Yes, I watch oil, I watch metals, but mostly for swing trading, not for day trading purposes. These four guys right here, these are my income generators. And trading is, the more you understand that trading is a rule-based system, it's about finding highest trades. It's about waiting, having the patience to wait for the setup, because I often tell, my traders that, hey, you have to have the patience. And some people say, hey, I don't have the patience, I just jump in. And I'm like, why would you jump in? I mean, why? Because educated traders know that they should not jump in. Jumping in is not a strategy. Scaling in is not a strategy. You either see the entry or you don't. Okay, so you have to have the patience to wait for the setup, and you need to know what to look for. And if you're just jumping in, it means that you're lacking not only discipline, but you're lacking the education, because you don't know where the entry point is. You don't know where the stop is. You don't know where the target is. You're just testing the waters. You're just a liquidity provider for the market. And we thank some traders for that, because that is what generates these massive pop-ups. Plus the traders that keep on shorting, and they generate the flurry to the upside by stopping out constantly. And you need very good money management skills, really good. You need to know exactly your position size. You need to know how your reaction is going to be into target one. You need to know how to read price action to see whether you're going to take partial profits into target one or not, and where you are going to trail that specific trade. And you need to have mindset. So what is the power hour? Okay, I take all my trades in the power hour, even the swing trades I take in the power hour. So what is the power hour? So the power hour refers to the first hour of the new trading session, where typically you're seeing a surge in trading activity and in volatility. These periods often are characterized by higher trading volume, so more participants into the market that generate more significant moves. Oh, velocity, which can create opportunities for traders to capitalize on short-term market fluctuations. And there are two power hours every single day. There's one in the morning that I trade, and this is immediately after the market opens, 9:30 to 10:30. And during this time, the traders react to what? To overnight news, pre-market data, economic data releases, and other market moving events. The morning power hour is known for its highest volatility and significant price swings as traders establish their positions for the day. And this is what I focus on 100% of the time, or I would say 99.9% of the time. There is a second power hour that is going on into this market. And in terms of volume, is actually equal or it's a little bit more volatile and it captures more volume in the afternoon power hour. And this happens during the last hour of the trading day from 3 o'clock, 4 o'clock Eastern. And during this period of time, traders make the final adjustments to their positions before the market closes. And the afternoon power hour can also be influenced by end of the day order executions, portfolio rebalancing, and other strategic trading decisions. I like to trade the power hour only under certain circumstances, and we teach this in our course. It's called the ramp time. And typically when you have like a massive down day, you're always going to expect a big pop between 3 o'clock and 4 o'clock. Okay, so that is where you would catch me in a trade. So understanding these power hours can help you plan your strategies that will increase as the increased volatility and liquidity can persist in both opportunities and risk. And this is my portfolio as of right now. You're going to see here that today's November 19th, right? And this is the S&P trade that I took. Okay, you're going to see here that I have a minimum size, right? Only 5 contracts. I traded with less size today because I didn't want to get overexposed. Plus, we had a relatively wider stop today, so we didn't have fleeced out. And this is my cumulative return this month. A lot of traders say, "Oh my God, I would love to have that in a year." Well, you can have it. It all correlates to your account size. That's why I'm saying, like, if you have a smaller account size and you like to trade a bigger account size, you could opt towards a funded account. Funded account, you can have access to $500,000, $1 million, or whatever, or $300,000, whatever your heart desires, literally. So trade closed this month 23. You can see them right here. These are all the trades that I took. So November 1st. So from the beginning of the month till now, this is my stat. So I had some losses here, but you can see none of the losses exceed $5,000 because that is my cap. So why futures trading? Well, because you have a reliable buying power, you have good volume, you're trading major markets, you can trade it for income, meaning day trading, or wealth. You can also hedge with the futures market. You have tick values and price ranges that can suit any trader. You can trade Dow or ES or NASDAQ, etc. You can trade minis or micros. Micros are fine or perfect. They're 1/10 of the size of the full size contract. And you could trade, you don't need to use a scanner. I use a scanner because I am a very active swing trader, stock swing trader and investor. So I use a scanner. I use actually 3 scanners, but you don't need that extra cost. The scanners are costing me about $2,000 every single month, over $2,000 every month. So that is something that you don't need to pay. Okay, if you're a day trader, if you're a stock day trader, then about $2,500 you got to spend on that. You don't need any special indicators. You guys saw I just used some moving averages, and that's pretty much it. Price action is king. You get lots of tax advantages. You can talk to your accountant about that. No pump and dump. Stay from rumors. No manipulation. No downgrades, upgrades. And what I like about it is that it's a 24-hour market, so it's a hands-on risk. And by the way, on Sunday, I had an alert from Friday it was on gold. It was on gold. Guess what? You see the alert, you take the trade, because we discussed the trade on Friday. Okay, and you would have been up huge on it. All right, so account size, like I said, in order to start day trading stocks, you need a minimum account of $25,000. In the futures market, you can open an account with $5,000, but I don't like what the brokers are doing. Some brokers are allowing you to open an account with $500. You're not going to get anywhere. Do you think you're going to generate income with $500? No, they're after your money through commissions. That's it. So they're actually taking advantage of a lot of traders opening small trading accounts. Okay, that's not a market for small trading accounts. You could go on route, like I said, many, many times. If you don't have the money, if you want to start trading, it's actually safer because they have rules that are going to keep you safe. They are literally involuntarily teaching you about risk. The advantages of futures trading, I have two examples for you guys here in terms of buying power. So you can see them right here. We have, let's say, the buying power here in NASDAQ. If you want to buy 100 shares of NASDAQ, that's about $15,000. And you can see here that we bought 100 shares right here where the arrow is. We left it into the end of the day. We did this trade and we generated $300, which is fine. $300 is fine with the buying power of 15,000. Let me share with you side by side. NASDAQ, buying power 17,000. When it was 17,000, right now with the election and the volatility is 33,000. But let that aside, okay? It's going to calibrate. As you can see here, we have one contract equivalent to $17,000, so very similar to what the Qs are trading. But look at the returns here with the same risk, $2,480. But wait, there's more. I hate to say it, but with the $1,700 in buying power, you could trade micro NASDAQ with tenths of the size of full-size contract, which same entry, same exit, $246. It's actually very close to trading the Qs with 100 shares and risking $15,000 in buying power. And here's the SPYs. In SPY, buying power in effect. Here, it's actually 12,000 because excuse me. The buying power is 20,000 for 100 shares, and we generated $262 on the same move. Now, in S&P, I was already in this trade, but for one contract here, we generated $3,675 with a buying power of 12,000 because you take this, you divide it by 4 because I was already long from this from the trade that we took. Okay, so I added to my trade, so to speak. And then these are the micros, $1,100 in buying power with one micro, that's $127. Just do that constantly. Just generate $100 on an average every day. Yeah, you're going to have losing days. You're going to have 3 losing days. Maybe you're going to have a losing streak of a week, but then you're going to have 2 weeks of winning streak. Okay. All right. So time frames. I told you guys that time frames are very important in the sense that you need to know how to look at the time frames, because a lot of times, I mean, honestly, I have not met any educator that would teach time frames. They would say, yeah, you can trade on the 1 minute, you can trade on the 2 minute, you can trade on the blah, blah. However, time frames are very important. The reason for that is that not all time frames are equal, and time frames usually where the higher odds setups are formed are typically on the 1 and 2 minute between 9:30 and 10 o'clock, and this should be your focus. From 10 o'clock to 10:30, it's the 5 minute that works. And from 11:30 to 2 o'clock, the 15 minute. Today, I showed you guys and I shared with you the trade that I took today for 15 points in S&P. And the trade was getting very close to, the trigger was actually getting very, very close to 10:30. Okay. And because it was getting very close to 10:30 and because we had a lot of price compression going into that momentum, I decided to trade the 15 minute because it was much clearer. The setup was much clearer on the 5 minute than it was on 15 minute because you're eliminating the noise from the 5 minute, the chop, red, green, red, green, red, green. It was the Christmas light effect. So this is what you need to focus on. Now, I'm here to share with you a special invitation to my 90-day power income futures trading masterclass. We have never done this before. We're doing it right now, and this program is not likely going to come back ever, because it takes a lot of logistics and a lot of my time, and I don't really have that much time, okay, to spend on this. However, this is a class for December. So the class is going to start on December 9th. It's going to be live for 5 intensive days from 1 o'clock to 4 o'clock. And we're going to teach you how to day trade. And of course, not only the power hour, but throughout the day, nonstop. The more if you want to stay in front of the computer all day, be my guest. I don't recommend it, but you can trade around the clock. So this is going to teach you how to trade the 24-hour market. It's going to teach you how to trade in your trading session. It's going to teach you how to trade the Asian session. It's going to teach you basically how to take overnight trades. You heard me earlier about gold, how to potentially take some swing trades. So this can teach you how to generate income. Not only that, but last Sunday, so not this Sunday, but the prior Sunday, we had a trigger in natural gas. Okay, so natural gas was also an instant gratification for us, because by the time we woke up on Monday, we were already up several $1,000s. Okay, so if you want to join now, you are going to receive access to the trading room until March 31st. So what that means is that when you sign up, we are going to send you the login for the trading room. So you're going to have access to the trading room until December 9th. And then obviously until December 9th, the course starts. Plus, you're going to get access into the end of December, plus 3 full months, January, February, and March. We have never done this. We're never going to bring this back. And there's one more thing that I wanted to add here that is super phenomenal. Get ready. We're going to be adding the swing trading course for free. So we're going to be adding the swing trading course for free. And that is for futures, not for stocks, but for futures. But you can apply the concepts to stocks as well. Obviously, futures trading is a little bit different than stock stock swing trading. But we're going to teach you the trading course for futures, the swing trading course for futures for free. And this is a $4,099 value. Literally, if you go to our website right now, you're going to see it. We have the power income futures trading course, which is $6,000, and we have the swing trading course for futures, which is $5,000. And everything that you guys see in here is going to be for $6,000, $500,999. Okay, so what you get with the course, you get the Power Income Futures Trading Live course, where we take you from zero to hero, from student to pro trader. And this is the course that you're getting. In addition to that, you're getting the swing trading course for futures for free. Okay, so you're going to get this on demand. You're also going to be getting the e-manual for both classes, plus the on-demand recordings, yours to keep forever, not for 1 month, not for 30 days, not for 50 days, not for 100 days, and then you're done. And we're going to have this limited, okay? Because we're going to be in line with all the others and all the other educators as well. We're going to give you access only 30 days or 90 days and done. By the way, e-manual, 650 pages of education, strategies, training plans, and more. We talked about a trading plan, right? Unlimited live retake. So what this means is that every single time we do a class on futures trading, you guys are going to be invited for free. Why? Because you're not going to be able to retain all the information from day 1 and day 2 and day 3 and day 4 and day 5. It's an awful amount of information. 650 pages. Do you think you can memorize 650 pages and then correlate them into live market environment? It's impossible. I poured my heart and soul and all my trading education into this. You get unlimited retakes again for free, because repetition is key. And I promise you that every single time you're going to come, you're going to get a huge light bulb. We have traders that have done the retake 20 times, over 20 times. And every single time they come, they go like, oh my God, now I get it even more. Now I get it even more. You're going to get 3 months access. That is going to be January through March. Plus you get the bonus December and for the rest of November. So you get half of November, the December, plus the 3 months, where I hold you by the hand as I teach you how to trade, okay, successfully. So you're going to learn how I take my trades. So you're going to hear the entries, the stops, the targets, and why, because why is the most important thing. Why am I taking it there? Why do I see the target in there? Why do I take this index versus the other index? You're going to get access to a private X feed where you're offered alerts, where you're going to be offered alerts when the environments are changing or when trades occur. Last Sunday, we had gold that triggered. I called it in the trading room on Friday. The prior weekend on Sunday, we had natural gas trigger. I posted. Okay. You'll also get student personal support. Every time you have questions, you can get back to me, because in trading, there is no silly question. There are no stupid questions, because oftentimes traders are refraining from asking questions because they go like, oh, I think this is a stupid question, so I'm not going to ask it. Trust me, the stupidest question is the best question, because there is, look, it's your money. There's no stupid question when it comes to money, okay? You get a risk sheet. I'm going to share with that for you in a second to show you how you can position size so you can grow your account. You're going to respect our rules in here. You're poised to grow your account. So the total value of the course is literally over $36,000. And this is not a watered down course. This is freaking intensive. And this today only, it's going to be $599. Literally, it's all about $16 a day for 365 days, if you think about it. And this is the only place where you can learn how to trade like a pro while you earn money. So you come here, you learn, and you earn at the same time. So if you want to start your journey, I'm going to put the link right here into the chat box. So if you want to sign up, here's the link. If you want to get from student to pro trader immediately, if you just want to start making money, if you're serious about your money. So get to this link and we talk about what is included in the course. Again, a lot included. This is the power income course. This is for day trading. This is for swing trading right here. And what is included with the course? You're going to have all the information in here. You have a lot of information here. So when you sign up for the course, we're going to send you an introduction to futures about a couple of days before the start of the course. So you're not going to get that immediately. You're going to get it probably a day before the course or 2 days before the course. This is an introduction to futures. You're going to have a full lesson on candles, and all these are live. Candlesticks, market cycles, market trends. We're going to teach you how to read the change in the trend. You're going to be able to capitalize on a phenomenal moves like we capitalized today on S&P. You're going to get trading time frames, executional time frames, analytical time frames. You're going to get the anatomy of the trade. So how to calculate those really awesome entries, stops, targets, etc. Risk level. You're going to get market tempo. You're going to get trigger time strategies as well. You're going to get key skills for trading success, technical analysis. You're going to get money management. So I don't see it here, but our page has been down and we just got it back up. So we hope that it's actually, running smooth from now on. But anyways, so if you want to sign up, again, this is your chance to sign up. Again, total value is $36,000. Now it's only $6,000. This is an investment in yourself. And don't forget that everything that, it's trading related, is literally talk to your account about it. It's a write-off. So these are our trades. You're going to get access to this performance portfolio where you have all the trades right here. You can see, and we're tracking then by contract here. We don't recommend you trade it with standard contracts. This is just a tracker to show you, the trade that we took within the trading room. We also have rules for you guys. We have monthly performance. This is access to my monthly performance right here, and you can see through position sizing how much better and how much faster you could grow your account. Like literally in half a year, you can more than double your account. This is what I do, and it's tested. These are my personal results, so it's not like, oh, it's hocus pocus. Okay, so these are my results right here. Also, we're going to give you access to roll dates, year-to-date information about where our accounts are, option expert. We're providing you layouts, charting, holidays. We have indicators that we use, limit down rules just in case we're going to get a roller coaster market, and so much more from this. So if you're ready to sign up, this is the link right here. More than happy to have you in the course. And now I'm open for questions. Okay, so Blue is saying, don't understand futures used to buying stocks, only SPY Qs. So the SPY is equivalent to a futures contract of S&P 500. So you have futures S&P. And same with NASDAQ. Instead of Qs, you just have a different symbol. You have NQ. So not much different. Let me show you a little bit here. So this is, let me go to the daily because it's a little bit more clear. Okay, so this is the S&P contract for futures, okay? You said that you're used to trading the SPYs. Here's the SPYs, okay? So there's not much difference. It's just the symbol, right? So the SPYs is the ETF, right? And when you're talking about ES, the S&P futures, ES, this is the futures contract, okay? So basically this one is leveraged, okay? And then you have the SPX, right? This is the SPX. By the way, there's a strong buy level here, over 59.15. For those of you that are trading options with S&P, boom, 260.20. Very, very good setup right here. And same with the Qs, right? You're used to trading the Qs. Here are the Qs right here. You can see the charts are exactly the same. Definitely, you're going to have different price values like I showed you. Then you have NASDAQ futures, okay? And you have NASDAQ futures right here. By the way, very strong buy point that is, you know, approaching right here over 7. I can't help but mention it again. All right, so other questions? Would future trading include shorting stocks in the overnight or at the open end of the markets? Dan, the futures market is close to a 24-hour market. So if you want to trade at 1 o'clock in the morning, you can, or you could trade NASDAQ, or you could trade S&P or Russell or anything off of that futures panel. So for example, here's a minute. Okay, so you can see here, if you want to trade at 2 o'clock in the morning, be my guest. If you want to trade at 3 o'clock, 4 o'clock, so you can trade around the clock. The markets are opened. All right. Let's see what other questions we have. We tackled the starting account minimum. Can we trade minis during the day? Of course, 24 hours. Okay. All right, so this is pretty much it. So if you guys have any questions, again, feel free to ask, or I'm going to leave your my email. If you have any questions about the course, my team is ready to answer your questions. All right, info@TradeOutLoud.com. And remember, this is the Power Income Futures course. This is not going to come back. So this is, boom, it's very, very, this is the complete package. Okay. Okay, so I'm going to put the link down here again. All right, so yeah, David, this the new link here for the course. Okay, so if you guys are ready, be my guest. Okay, so I think I'm done, David, here. If there are not any other